So, does the rally have legs? For more on today's gains, we are joined now by Michael Vogelzang, President and Chief Investment Officer at Boston Advisors. He joins us from Boston. Michael, welcome to Bloomberg News. Good to see you again.
Hi, Mark. It's good to be here.
The question of the day was, does the rally have legs?
Well, you know, we're really of two minds here. In one certain ways, we're very, very cynical and very skeptical. We're worried that this market has come so far so fast, and we think there's some real trouble ahead if we're not careful, and particularly if the government doesn't do some things very, very delicately. However, having said that, the market really feels like it wants to go up. There seems to be significant momentum. There's clearly buyers out there using the carry trade and pushing this market higher. So we have 1,200 to 1,250 as sort of an intermediate term level. You know, that's up another 8 to 12% or so. Right. Again, not terribly interesting to us. We think it's kind of a sucker's rally in some ways, but we think the market's got some steam ahead of it.
Why do you think it's a sucker's rally?
Well, there's a lot of stuff that's a problem. I mean, one of the things we were doing this morning is looking at some fund flows, and as you've probably reported, the U.S. flows, the money into U.S. equity funds since July has been negative, and yet the stock market, that U.S. equities, have been up almost 20% during that period.
Okay, Michael, let me stop you for a second.
Sure.
Because Boston Advisors is a quantitative firm. So what are your metrics telling you?
Well, the metrics are saying, you know, that the valuations are reasonably high. Growth rates are kind of punk and looking worse, and so we're pretty skeptical
Actually, that
here.
might be a first. I don't think I've heard that one before.
That what?
that they're punk.
Yeah, the growth rates are kind of soft. They're you know, what we've seen is very, very good earnings numbers relative to expectations the last 3 quarters, and that's really what's been driving the stock market higher. You know, along with a whole bunch of supply factors, and demand factors. But the fundamentals are actually reasonable, but growth rates are still lousy. I mean, we're starting to get the turn and annualize the big drop off last year in the 4th quarter, so we'll start to see some slightly positive earnings numbers. But generally, we have not seen great earnings quality here.
Okay, Michael, you make a good point, because as we have been seeing a lot, companies are beating their quarterly estimates, but that's not the real story, is it? At least on this level, the revenue story, the growth story, that tells the real story, doesn't it?
Right. We've been worried about revenue growth for quite a while, and we saw a little bit of it this quarter. It wasn't too bad. Certainly better than the last quarters before that. You know, what's interesting to us is the best earnings growth for the quarter. If you look at quarter-over-quarter and year-over-year earnings growth in the S&P 500, it's been utilities and staples, consumer staples, I believe. And both of those, of course, are some of the worst performing sectors in the market. So, you know, there's some real interesting divergences going on. You know, this dollar weakness is really driving U.S. equity prices. It's the same thing that's driving gold. It's the same thing that's driving commodities. And our worry is at some point the Fed's got to take the punch bowl away. We can't keep zero interest rates forever. We think it might be a while yet, but it just feels to us that the underpinnings are weak. There's some very odd currents underneath the surface here, and particularly the last 6 weeks, it feels like the market's changed in character.
Well, you sound like you really want to be optimistic, but you sound a little tentative.
Well, actually, it's almost the other way around. We're very tentative. We're actually fairly skeptical about the stock prices going forward, but we're sort of hesitantly positive about the next 3 to 4 months as this market continues to go.
Is that skepticism founded in, or at least rooted in, what you said earlier? Excuse me, that the government is going to have to do, they're going to have to be gentle doing some things, maybe such as exit strategy?
Well, clearly, Mark. I mean, what the biggest dichotomy we have here in this market is the government can't prop up the economy forever. Take housing, for example. You know, this first-time buyers credit can't last forever. They're going to have to withdraw it at some point, and at that point, the market's going to have to stand on its own. And there's plenty of consumer skepticism out there. I think the political unrest at huge deficits and massive government spending to try to keep the economy going is beginning to move up and actually play into consumer and investor sentiment. So you're starting to see negative consumer sentiment. I know one of the polls you guys just talked about today showed a little improvement. Right. But we think professional investors are actually much more positive in the market than retail investors. And, you know, if you look back in the history, actually retail investors aren't necessarily so naive, and quite often they get it right. So yeah, we'll see where it goes.
Are financials, in your view, still difficult to invest in at this time?
Yeah, we think most of the easy money's gone. Again, you know, the financials have been ground zero for this thing for the last 16 or 17 months. months, and we don't see that as any different. You know, there are two worlds in two very different worlds in financials. There's the stuff that has been rescued, effectively came back from the shadow of the valley of death in March, and those are those days when you get the sort of low quality financials rallying big, you get the high quality financials doing very little. Then there are days when financials generally struggle on average. The better quality, the more conservative and stable portfolio kind of companies do very nicely. And we're talking about some of the big insurance companies are doing beautifully, property and casualty guys. Some of the really high quality banks that didn't have any real estate and consumer problems have been sort of rolling through this problem without any difficulty in their stock price.
Well, Michael, let me ask you, when are we going to start seeing profitability growth?
Well, that's the question, right? I mean, not only that, but profitability growth without the government providing 0% interest rates for these guys. I mean, we expect to see the banks having profitability growth. They should be doing well. The Fed Reserve is basically holding down interest rates so the banking system can heal on its own through long-term growth, and we're seeing that. The earnings are astounding. The reason they're so good is because of, again, this sort of government sponsorship of administered rates is at zero. That's a good thing. I'm not sure how long politically, how tenable that is politically over the long term.
Well, Michael, and I believe you call the U.S. government the largest private equity manager in the world. You still stick to that assessment?
Right. I mean, you know, the problem is I think they are the largest private equity owner. I think they're not a very good owner, however. I mean, look at what's going on at AIG and some of the other big companies. They can't keep their CEOs. And you know, as a shareholder, both a private shareholder and also as a taxpayer in the government, I want these companies to do well. I want them to succeed. And if we have to pay somebody $5 million a year to run a big complex company that makes some sense, I'm all for it, but I don't think our bureaucrats can do that.
Michael, 15 seconds. Are you still overweight global industrials and technology?
No, we've cut back those exposures. We're basically market weight on both of those. They've been really good performers this year. We're actually beginning to move up our underweights in staples and some of the more defensive areas.
Michael Vogelzang, President and Chief Investment Officer, Boston Advisors, joining us from Boston. Michael, thanks.
Thanks, Mark.